please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We have our first corporate guest of the morning. The Sun TV stock has been seeing a decent amount of weakness, possibly due to market share loss in the Tamil market. SL Narayanan, the Group CFO of Sun Group, joins us on the phone line to talk about the business outlook. Good morning, Mr. Narayan. Thank you very much indeed for taking our call this early. It's not a happy question, and this is not reflected in my house. There are a lot of Sun TV fans. But your market share has been dropping, and rather precipitously. About 8 quarters away, it was closer to 70%, 68%. And last reading was 47%. That's a big fall. What's needling the Sun TV market share?
Morning. I think, much has been made out of this. It is more a mathematical reflection. If you look at our numbers in terms of GRPs, it hasn't moved much. It's just that the size of the market has expanded. And some of the newer programming which has been come from the houses of the competition, they have actually brought in a new set of viewers. So it is... It optically looks like a market share loss, but in fact, our traditional audiences, if you look at our primetime ratings from 6:30 to 10, that number hasn't moved at all, and which is why our revenue prospects have also not got any way impacted by this.
Okay, so what is the market share currently?
If my memory serves me right, I think we are at about 1,200 plus GRPs in a GRP universe of about 2,300. Okay. So I think it should be around 51%. I may be wrong by a few percentage points. I don't look at ratings every day.
That's fine. No, the reason I ask is also because, what we're seeing apart from the share getting distributed, digital media disruption has also been a key overhang on traditional media, and that has been fragmenting the ad revenue pie as well. What's the new normal going to be? Should we expect TV ad growth to moderate to about, single-digit growth, or will it continue to be in high teens?
I think it's too early to predict the impact of OTT on the overall ad market, because if you look at today's situation, the people that are watching these highly upscale distributors like Netflix, that's a very, very small percentage of the universe. I don't have the data, but somewhere I remember reading that about 6 million is the subscriber base for some of these new OTT distributors. Contrast that with the size of the market in South India alone. We believe that there are close to 54 million homes, and therefore I think it's very early to put out a prognosis on what might be in store. Because at this point in time, we are seeing a fairly good buoyancy in terms of prospects for advertising revenues. And as you know, with the most recent quarter that ended 30th June, we grew by almost 20%. So we don't think that there's any need for readjustment of our distribution strategy at this point.
Okay. Mr. Narayan, in a sense, we are both this side of the table and your side are both in the same business, and we understand the digital challenge, but it is cascading. Yesterday, we put out a news that UPI payments across phones has surpassed credit cards. Credit cards is a 30-year-old industry in India, and UPI came 2 years back, but it has surpassed in terms of volume and value. So when it comes, it can come very suddenly. Already, your subscription revenue is now down to a growth of probably 15%. Can you maintain that for FY19?
I'm not for a minute saying that this is not a threat, and which is why we have started off Sun Next more than a year ago. All I'm saying is the kind of shifts that you saw in the West, because cable TV and DTH prices had gone to some absolutely unsustainable levels. Okay. And therefore the cord cutting happened. But if you look at the Indian environment, the kind of pricing that's there for your regular digital cable and your DTH, I mean, the best of the packages will be under 500 rupees. And I mean, the comparable data for the US was, it used to be about $150, and suddenly you had Netflix offering stuff at $15. So, and bandwidth prices are also much lower in the US on a relative scale. So the shift was absolutely tectonic in a matter of few years.
Yeah.
That kind of a situation, I think, is a little far away in India.
Okay.
And again, I'm not for a minute saying that we'll distribute only through cable or DTH. We have content, and I think we have extraordinary content. And if that gets better priced through an OTT medium, we'd switch it to OTT before you say jack.
So on an average, all right, just give us some ballpark numbers then. On an average, what kind of ad revenue growth and what kind of market share are we looking at, given how dynamic the industry has become?
Yeah, see, one of the things that we are doing to correct the market share loss is to now position a second GEC channel in both Tamil and Telugu. Starting this month, Sun Life, which has been showing retro movies in the last several years, will start offering some of the programs that will start competing with our rivals. And that will be more urban-facing, targeted at the age group of 18 to 30 years, and very different from the staple that we offer on Sun TV. See, the problem we have is Sun TV cannot change its programming overnight because it appeals to a lot of middle-class homes where families sit around the TV and watch. So I suddenly can't have something which is very provocative in your face. So that's the reason why we are repositioning Sun Life as a different genre of GEC, which will start offering slightly more quirky stuff.
Okay.
You know,
I take your point, but if you can still give us an idea of what may be revenue growth. I mean, I know it's a little difficult, but FY19, you think you can continue to maintain a 15%?
Yeah, see, one of the biggest opportunities that we have today is the remaining, process of digitization in Tamil Nadu. Because as you know that much of Tamil Nadu wasn't digitized when the rest of India got digitized. So we believe there's another 8 to 8.5 million homes that are up for grabs. I don't know which way it will go, maybe some digital cable, some DTH. Irrespective of who takes what share, I think a broadcaster like Sun TV will have a huge opportunity in terms of revenue growth because till recently, we did not have any meaningful revenues coming from the analog universe in Tamil Nadu.
Okay.
So
Mr. Narayanan, sure. I just have one final question lest we run out of time. The other big concern that investors had is the investments you're making in, in new content, whether it's Bengali, Marathi, etc. Some of your peers have taken a longer time for break-even. I mean, it's taken about 4 or 5 years for a break-even period. Can you tell us what the strategy is there and how long would it take?
See, the strategy is basically to look at markets which offer growth and where the competition is not intense. And that's the reason why we're staying away from Hindi. We're not getting into sports. We believe that we can make a credible business case out of the Bengali and Marathi foray. And we are reasonably confident that we will break even in very quick time. We should be launching Bengali towards the end of the current fiscal and Marathi slightly later.
Okay. Well, Mr. Narayanan, it's always a pleasure speaking with you. Thank you very much for joining us and all the very best.